Welcome to the Closing Beat, everybody. Happy Friday. Hope you're having a great day here so far. Hope you had a good week. This is a quick stock market update show. Be a quick one today. We got a lot to cover, but just a show that we do to cover the stock markets, the good, the bad, and the ugly. We'll cover it all. We're also playing a game. It's called Guess the Dow. If you want to go to the website there in the bottom right-hand corner of your screen, you can guess where you think the Dow is going to close next week. You have until tomorrow around lunchtime to place your guess for where you think the Dow will close tomorrow, and close next week, and we'll go ahead and dive into that. We've got a winner for this week. The person who guessed that the Dow would close where, closest guess without going over, was Mark Shimazu. He guessed 24159.57, so that was the closest guess without going over, believe it or not. Kind of a wide margin of error there. I noticed that the guesses are further apart than they usually are. We're not sort of like focused in one area there. There were actually only 11.9% of the guesses higher than where the Dow closed today. So most people, most of you, all the rest of the percent there, had bet on the markets actually heading lower. So congratulations, Mark. We'll be reaching out to you to see where you live so we can send you a gift card. For those of you that don't know, if you play the game, it's not really like a marketing thing. We won't send you any emails or sell any of your information or anything. But if you do win and you're the closest without going over, we'll send you a gift card like Mr. Mark Shimazu there. Or if you're one of our customers, we can credit your account if you like. Either way, you can also take the gift card if you like. Well, let's talk about the stock markets today. You got the Dow higher by 36, the S&P floating around even, down 2 on the day, and the NASDAQ lost 17. Tech took a little bit of a break off today. Basically, in the news, you got Trump says, okay, I am considering an interim deal there. Yesterday, Bloomberg reported that he was not considering that, or that he was considering that. The White House came out and said, no, he's not considering that at all. Well, then he walks out later and says, yeah, it's something we'd consider. Yeah, sure, why not? You know, we're into working things out. I mean, the people at the White House have to be like, come on, man. Like, just let's get on the same page here. So I'm glad I'm not there. Anyways, love story continues between U.S. and China. China came out overnight and they said, we're going to exempt soybeans. We're going to exempt pork from the tariff list as well. And they're going to start buying some of that, supposedly officially start buying some of that from us. So that helps start things off a little bit higher. We had retail sales numbers come out, and retail sales numbers on the surface were really good. But if you look a little bit lower there, it was sort of flat. You're going to be promoted the idea that retail sales were strong and the U.S. consumers out there spending money. But if you break it down, really, there was a lot of underlying weakness in there. If you take out autos, meaning auto parts and auto sales, really it was kind of flat, right? So not really all that great there. One thing to notice there that restaurants and bars actually pulled back the most. That's been one of the leading areas of the retail sales numbers. I'm going to try to show you real quick. I don't know. Can I put this up? I'm sorry. I keep saying I'm going to fix this. I didn't fix it. What you see on the screen there is the comparison between people grocery shopping or spending their money going out. And last time retail sales numbers came out, we said, hey, if it keeps going on this trend, then by the next announcement, we could very well be spending more eating out than we are going to the grocery store. Well, bars, restaurants, and eating out, that pulled back pretty sharply, actually. That was down 1.23%. So going out and eating at the bars there, you know, it just, people are scaling back a little bit, apparently. We'll see what happens. Let's go over to the stock markets here. You've got the S&P 500 just flirting with making all-time highs there. We've got a little bit of an issue where not everything is making new highs or is even close to all-time highs. We'll try to cover some of that in a minute, but there's the S&P 500 flirting with those all-time highs. You got the NASDAQ playing catch up there as well. Look, it had a good second half of the week this week, so just taking a little bit of a break. And if you look at the Dow, a little extended in the short term, also flirting with making those new highs. Totally understandable that it just couldn't find the energy on a Friday before the weekend, before the Fed announcement next week. You kind of understand that. Sector-wise, we kind of finished where we started off the week, meaning we have REITs pulling back. They started the week by pulling back. They finished the week pulling back. Consumer staples finished the week by pulling back just a little bit. Utilities pulled back a little bit on the day, kind of how they started the week. Gold continuing the day lower, the week lower. Started the week pulling back, took a break, finished the week pulling back. Silver got hit the hardest out of the group there, down 3.5% on the day there. So moral of the story is we started the week with some weakness in those defensive type areas. We then finished the week looking like that as well. What do we got? We got oil lower on the day as well. continuing to pull back from that little fake breakout that happened there. The International Agency of Energy came out and they said OPEC's actually going to have a surplus here, and OPEC said yesterday we're not even going to talk about making any cuts or anything till the end of the year. And so if we go back to that chart for just a second and hop on over to this other one that I put together, I don't know that, they've been trying to reach out to the world and say, hey, produce less oil. We're seeing that demand is going to be lower. Well, on the screen you see purple, that's OPEC's oil production. They have been cutting back here over the last few years in general, but look at the U.S. In orange, that's the U.S. production of crude oil. We're just plowing ahead, man. We're going to make as much oil as possible. So OPEC and the U.S. now, and of course OPEC plus Russia, trying to work together, figure something out there, because right now there is a whole lot of oil out there, and if demand is in fact going to be lower, well, then you have a recipe for lower prices in oil if we don't scale back. The sharp drop in bonds continues. Let's look at the 30-year. That one pulled back. It was the biggest move of the week, believe it or not. And so that continues. It's supposed to. Remember, I gave you the stats on that 30% of the time it's positive. For the last 10 years, 70% of the time it's been negative during this stretch. We've got another week to go. And so it's just historically a weak time for bonds. Kind of welcome if you're looking at those rates there and a little bit worried. However, it was the biggest 1 week jump in the 30-year mortgage rates we've seen in just about 3 years. So if you're out there shopping for a home and you saw the rate spike up real quick, I hope you locked something in there, because that was pretty significant little pullback. TLT is actually where we got the stats from looking back, and so TLT naturally being the long bond ETF pulled back about 2% today, breaking through the 50-day moving average there. So man, I mean, I don't know how to say it. It's like a lot of people don't look at bonds, but it's kind of like when a stock moves too far too fast. You got a quick rocket ship up. We're all looking at it going, this can't continue. Come on. And then it starts to pull back, right? Every time it pulls back towards that moving average. Well, bonds basically did the same thing. The actual yield changed so much this week. I mean, we just don't see that sort of thing. So although we were assuming, it'd be a little bit of a pullback, I don't think anybody was thinking as aggressively. So rates shooting back, the 10 to 2s no longer inverted and have not been for some time, actually. So you've got that there. We've got financials. A little bit higher again on the day. Can you see it? Nope. All right. Financials a little higher on the day. Closed up about 0.75%. Some of the stocks did well in the sector. JP Morgan hit new 52-week highs again. Just money coming into financials. People willing to give financials a shot now with those rates creeping back to normal. A lot of people thinking, okay, we're getting back to normal. Our customers know better than that. We did a whole class on how this exact rate inversion would go. And so far, history is exactly repeating itself. So it's both good to see that, but also not good if you see the results on that one. However, semiconductors took the day off, right? So we need the banks and we need tech to really get the S&P moving, and we just didn't get that today. Semiconductors, tech in general, just took the day off, kind of quiet over there. Basic materials, I believe, were the better performing area of the S&P, up just over 1%. Sort of a broad rally there, and if you're looking in the Dow Jones, the symbol DOW, which is not the Dow Jones, it's Dow Chemical, that was the best performer there by about 1%, actually. Just thanks to a broad rally there. I looked around at some of the other names just briefly. You had names like Sherwin-Williams up 0.5%. That's in the same category there, and just really strong, right? Just looking good. Back to the financials for a second. Regional banks finished out the week with a really strong week there, coming up across some resistance there. It's up every single day this week thanks to those bonds pulling back. So that's looking good there for you as well. I want to try something real quick before we go to the next part. Can I go over here? We don't need this one anymore. Here is all of the sectors' performance for the week. This is actually kind of messy. Yeah, all right. So breaking it down by sector, here's the performance day by day. The top 3 here, you're going to see up here at the top, you got financials, you got energy, and you got industrials. If I back those out, well, let's go to 1 month. If you go to a 1 month chart here, this is going to look pretty nasty too. All in all, trending higher, but this last week showing some real weakness. If I back out the financials, if I back out energy, hang with me, back out energy, back out industrials, there we go. You can see that basically everything tipped towards the downside there. So there's a big disconnect between the markets getting ready to make new highs, some sectors doing well, but a lot of sectors lagging behind there. So I just want to point that out. I don't know that this is something I'm going to keep following up with. I just thought that's kind of an interesting way to show it. So we'll move on. All right, stocks in the news today. You got Apple. Apple was down 1.94%. It was down a lot more. It was the worst performer in the Dow, actually, today. Goldman Sachs downgraded it. They said 165 is our new price target. They were at 187, so they were already pretty bearish. They were already down here at the 200-day moving average. They say, you know what, we're going to bring it all the way down to 165. They said, look, this free trial of the Apple TV Plus that you guys are putting out is going to have an impact on their overall overall prices and their earnings per share. Very, very rare. Apple came out about midday and said, that analyst is wrong. We do not think, and they used his exact words from his comments. They said, we actually do not think that will have a material impact on our earnings per share and our selling prices. So they were directly targeting that guy, saying, you're wrong, we don't feel the same way. Apple did recover just a little bit, but still lower on the day. So it's kind of cool. You don't normally see that. Or Apple doesn't normally do that. Square was a little bit higher on the day. Apparently their app, they're experimenting with the idea of letting people buy stocks within the app. That's great if you're an investor. If you're an active trader, no way. You can't use an app to do that. I see people getting so much trouble with that. But it's good news for them. I mean, it's a good way to drive more business. So Square a little bit higher on that news, and they needed it, by the way. Advanced Auto Parts up 1.16%. They were upgraded today by Citi. Citi says that Advanced Auto Parts has really sort of taken the lead here. They've got the sales momentum. They took the opportunity, by the way, to downgrade O'Reilly Auto Parts. So they sort of chose favorites in the space, which you don't always see that. But they downgraded O'Reilly. Not that they were saying it was a bad company or anything. They just said O'Reilly's valuation's getting a little bit higher there. We saw that earlier in the week where we talked about analysts coming out and not necessarily being negative on a stock, but just as saying it's a little overpriced right now. They're saying a little overpriced, a little overvalued at this point, and they think that that's going to probably take a little break. So O'Reilly just down about 0.75% on that one there as well. Broadcom, which is symbol AVGO, since they merged. Okay, so Broadcom down 3.5% on the day. Broadcom, they beat on earnings, they missed on revenue, basically had sort of a cautious sort of outlook going forward. They think that this sort of weakness in semiconductors is going to stay that way right now, thanks to trade. They kind of took their jab at trade there, and so that was that one. That's pretty much it. What else do we have for you? Piper Jeffrey says Netflix has more potential for international subscriber growth in Q3, so they're looking forward to that. You've got the NASDAQ still the leader, year to date up 23.2%, S&P up 20% even, the Dow is up 16.7%, and the Russell taking a little bit more of a commanding lead of third place with a 17% gain. Russell had a really, really good week this week. You've got 69% of the S&P 500 above the 50-day moving average. That's 6 days straight of increases there. We went from 56 last Friday to 69% this week, so looking good there. In the new 52-week highs, you had 19 52-week highs representing 7 different sectors. However, they were all names that we've seen. The only new name was Walmart. Walmart had not been on the 52-week high list this week and finally got it done here in Friday, so Walmart getting back to highs after all the earnings excitement there and the back and forth following that. You had one new low today. That's it, right? We haven't had a new low in a while, so you've got Altria hitting new lows. They also paid out a dividend, 84 cents, if that helps you there. Fell $1.61, but they paid out 84 cents. So let's see what that does for you. All right, got some interesting stats for you. Let me see here. Yeah. Okay, interesting stats here. So going forward, if you look back 10 years, take a 10-year window, the S&P has averaged a gain of 1.08% in the next 5 days, right? So if you're looking into next week going, I don't know, we got a lot going on, what should I expect? It's actually a pretty good performing week. It ranks in the top 80th percentile of weeks for performance in the S&P. Again, average gain of 1.08%. Let's see what happens. If you break it down by sector, the semiconductor sector is the best performer, which is good news because we didn't have them today. We need their help. Median gain of 1.65% since 1999. That goes back to its inception. It's positive 63% of the time over the next 5 days. So good news there, at least a little bit. It's not the greatest odds ever, but that's it there. If you're looking for the area that has the highest odds of being positive by any amount next week, it is the emerging markets, the EEM. Now keep in mind, they've already had a good run, But let's see if I can just hop on over there for you. EEM is the emerging markets ETF there. Look, they've had a good run already. We talked about this sort of sneaky rally coming up there, but over the next 5 days, 81% of the time it's positive, median gain of 1.63%, if that helps you in any way there. I just like sharing stats with you when we have them, so we'll see. What about Republic Services Group there? It was down a little bit on the day, so this is day 2. Yesterday it came close to hitting its average gain, but we still have 3 days left to go. It didn't officially hit it, so I won't mark it. Even with today, it did poke to new highs, but still didn't quite get to the average gain there, so we won't count that one just yet. What else? There's really not a lot of news to start next week. It's going to be a quiet start to the week, but Wednesday is when all the fireworks start, with the Fed supposedly, or at least we're all expecting them to cut rates by 1/4 point and give us some sort of guidance going forward, as if this is it and they're not going to cut anymore, or if they feel like they'll keep monitoring the situation and see and use all the tools available to us, if they use those kind of words. So we'll find that out on Wednesday afternoon. Of course, we'll cover it. Some of the other news here, you've got Felicity Huffman in that college scandal thing with Aunt Becky. Well, Felicity Huffman gets 14 days in prison, has to pay a $20,000 fine for her role in getting her child into school, sort of undeservedly. So that's that one. And we had a presidential debate last night. Democrats had their 3rd debate. I thought I'd look up some stats for you and see if I could share something geeky there. It was almost a 3-hour debate. If you take the start to the finish, 21% of the time they talked about health care. So we've talked about this in the past, how the politicians will test different sort of talking points. And when they land on one, they're going to stick with it. Well, they've stuck with health care. So 21% of the time they talked about health care was 22% in the last debate. So that means that that's one of their platforms. They're going to stick with that health care topic there. Now, in the last debate, Trump was actually 2nd place, meaning they talked about health care the most. They talked about Trump 2nd. It was 11% of the time they talked about it in the last debate. This debate, less than 3% of the total minutes in the entire debate did they talk about President Trump or Republicans, just sort of arguing about the other side. They didn't do that. Instead, they tried something different. So here's a strategy shift. Here is actually seeing in real time how they do this. They took foreign policy, which they almost didn't talk about in the last debate. I think it was like 11% or something. And they bumped that thing up. No, it wasn't 11%, it was 5%. So they bumped it up. They said, okay, that's the second thing. We're going to focus on healthcare and we're going to focus on foreign policy and see how people adjust to that one. That took 2nd place in last night's debate. They talked about it for 12% of the time. If you're looking at the odds, who is your favorite Democratic candidate? If you're on that side, we don't get political here. You can see I look at the numbers. I don't really care. Just don't mess with my dough, right? I'm open for ideas, whatever side you're on. Just don't mess with my dough. I got a problem when you do that. So naturally, Bernie Sanders would be out of the equation. Anyways, you've got odds of winning a primary now, right? So President Trump is at 89% probability of winning the primary, obviously. So there's still a chance, I guess, but that's what the odds are currently. Elizabeth Warren takes 1st place to beat all the other Democrats, including Joe Biden. Elizabeth Warren now has a 34.9% chance of winning the primary, so she outpaces Joe Biden, who is at 23.9%. And it seemed that the name of the game last night was just do better than Joe Biden, right? You don't have to knock him. You don't have to go after him. Just do better than him. Everybody was trying to just stand out more than him to make it seem like they had a chance there. So Joe Biden at 23.9% of the chance of winning the primary. And interestingly, Elizabeth Warren is the leader at the moment for probability to win the election, right? So if she was up against Trump, Trump still has the edge at 43% or something like that, but Elizabeth Warren has the best odds out of all the candidates at the moment. If you like Elizabeth Warren, then that's good news for you. If you like Joe Biden, you hope he kicks it in and gets something done. Or if you like any of the other ones, you hope that they stand up and do something eventually. And finally, we got Bitcoin. Just hovered around 10,000 all week. Actually, I don't have any cool update for you there. That's actually all I have to share with you today. I'll take your questions if you happen to have any. I'll do my best to try to answer them, and we'll go from there. Is there anywhere I can get a compiled list of major and regular financial events, such as seasons and regular dates for Fed or any other regular decisions? Yeah. Like a calendar of events, like when these retail sales numbers come out, Fed announcements. There's it's called Forex Factory. It's a free one, right? You go to Forex Factory, click on calendar. That one's free. It'll tell you when the announcement's coming out, if it's normally a market mover. I always try to think of the free ones for you guys, try to help you out there. Andy says, I like voting for positive people, not angry people. I agree. My American government teacher in college ran for mayor of our town, and he lost because he refused to air negative ad campaigns. He said, I just want to keep it positive. Let's focus on what we can do better versus what's wrong with the other person. And he lost because the other guy ran a bunch of negative ads about him. And I thought that was cool. It was a good lesson for the class. Yeah. I mean, obviously, being nice is not a winning strategy. That wasn't the lesson. It was just kind of cool to be a part of it instead of studying something that happened in history. You planning on visiting Mr. Icon in Miami? Yeah, if he's actually there, right? If he actually comes down and stays, right? Can you blame the guy? I mean, really? So if you don't know, Carl Icahn is essentially changing residency to Florida to get rid of some of his tax bill. It's a publicity stunt, really, just to try to shake the trees a little bit. He's a tough dude, by the way. You ever want to study like a real bull-headed guy? First of all, Boone Pickens. You got to study that guy. He passed away yesterday, or it was yesterday or 2 days ago. But man, he was a real bull-headed, just strong, charging kind of guy. I really admire that sort of thing. And Carl Icahn is most certainly, if not one of the strongest, and certainly ranks up there in history. What do you think about Altria as a long-term play, considering the recent news about vaping as compared to the past? Yeah, I don't think it changes anything in terms of how people treat the stock, right? There's a short-term news here. It's not official yet. But I think from an index perspective or from picking in an individual stock, I don't really think it changes much in the long term. I think they weather the storm, to be honest. I don't know. Plus, vaping is not like 90% of their business, right? I mean, I know they hope for it to be something and profitable and sort of a big part of it, but I'm not really concerned at the moment. I'm not telling you to buy it. I'm just saying the sell-off, I think, is like a little overdone, right? Jay says, if you have a Roth and a traditional IRA, is there a cap to what can be contributed each year? Absolutely, yeah. So either way, if you have a Roth or a traditional, the cap, if you're under 50, is $6,000. If you're over 50, it's $7,000. And that includes both of them together. So you can't put $6,000 in one and $6,000 in the other. If you open both of them, it's $6,000 total between all of your IRAs combined, whether they're Roth or traditional. Yep. Where can you see all these month-by-month statistics of performance of stocks and ETFs? I'm not sure what the question is. Month by month. You want to look that sort of thing up? You could pull the data. Like for us, we just grab the data and then look at it. Statistics. You could try FinViz. There's a free version of finviz.com. It doesn't give you stats or anything, but you could see the data, and then you could sort of calculate from there. I don't know of any good stat-type sites like that are free. There are a lot of institutional level ones, but they either charge you a ton or you participate through your platform. Yep. Does the 10-year yield going up today mean anything? In the long term, it does, absolutely. Over the course of this week, this sharp little rally here, it'll just temporarily make people feel like everything's okay. Yep. There's a rumored Philip Morris and Altria merger. It's not rumored. That's public. Or public rumor, I guess. I don't know. It's public knowledge. Came out about a week ago. If you want to contribute to your Roth IRA at once, is there a better time to do it, like the day before tax day? Any advantage there? That's a great question, actually. Next week, our class for our customers is going to be on when you contribute. When's the best time? Like Monday in the morning, Monday in the afternoon, Tuesday in the morning, Tuesday in the afternoon, or wait and just do it once a month and do a larger amount. We're actually going to go and show 20 years worth of data, just lay it all out, got the whole thing almost done there, to show you exactly what is the best time. And I'm not saying that there's going to be a huge difference between the days, but you got to realize that I'm out there, I'm willing to work with anybody, of course. I hope you keep us in mind, and whole sales pitch thing there, Jazz Wealth, yada, yada. But a lot of people are just getting started. And so they don't have tons of money. I, of course, work with the retirees and everybody along the way that they already have a lot of money. There's a different set of rules there. If you're just getting started, and you only have a few dollars to get started, and for some reason you choose us to get started, I want you to have every tiny little advantage that you can, because those tiny little advantages, if someone would help you get those now, means you'll have more money faster in the future. And I just don't think it's very fair that the bigger companies won't work with the beginners like that. So in the class, although the data, I haven't really like parsed through it yet and put it the way show it the way I pull it all together. But if there's even a tiny advantage to doing a weekly deposit Wednesday afternoon, then you bet I'm going to tell every one of our customers, just do Wednesday afternoon. You're not going to get rich off of it, but if it makes even a 1% difference over a 2-year time period, take it. If it makes a 2% difference over the life of your investing, take it. All it is data. It means you have to do nothing else. So I really, really, really like focusing on things like that. Small advantages, little tiny wins add up over time. And there you go. So we'll cover that next week. But that's a good question the way you asked it there. Like if you had to dive in all in one shot, when would be the best time? I've only seen studies where they say first available day of the year versus once a month. And it's always, of course, the first day of the year always wins. But historically, is there a better time to do it? If I had to guess, I would say September or December. I would say September, honestly, but that'd just be based on my complete guess. Every month, I share a class with, we do a portfolio update, and I share a chart that says if you only could pick 1 month to invest every single year, and all you had was 1 month to choose, which would be the best month? And so it depends on whether you like discounts or whether you like to buy on the way up. Yeah. What charting software are you using to show in the data, the grocery bars versus the eating? It's called Y-Charts. It's extremely expensive, and they wouldn't give it to us. So it's that's what it is. Yeah, that's pretty much it. Yep. Any chance NUE? You're looking at NUE. You want it back to 58. Did you buy it at 58, or is that your goal? Did you have that as a profit target? You might have had that as a goal or something, and you're like, I hope it gets back there. You got a lot of overhead resistance in the meantime. You got a big downtrend line there, just like EEM, just like the EWW, those sort of things. I know those are ETFs and they're country-based, but same thing, same picture there. You got a lot of overhead resistance. It's not going to be immediate if it does, right? It's going to take a break in this area just because of all the overhead resistance. All the technical traders have a field day with that, and you just hope they're wrong. You hope that it breaks above there and continues higher. Set the candlesticks on your chart to month, long time frame, and then just look back. Yeah, you can do that too. Yep. There's God, I think it's FinViz, where you can actually just say, show me the closing price over the last month, and then zoom out and things like that. I don't know. I haven't used that in a while, but I think you could do that there. That'd save you the time of actually setting your chart to monthly and then hovering over and looking at the close and then hovering over and adding it all up. I've been there. There's no point in doing that. That's hard. Yeah. Will the rate cut help or hurt REITs? You would think it would help them. They're overpriced, overvalued at the moment, so it's anybody's guess, I guess, at this point. But obviously, lower rates will help help that category, right? Help anything interest rate sensitive, at least in the short term. The fact that you do this on YouTube and back up what you're saying, look forward to... Oh, thanks, Andy. I appreciate it. Nice little comment or compliment there. I love it. Cool. Well, I'm sorry if I missed any of your questions. I love the good stuff there. That's a great way to finish out the week. I hope you have a great rest of your weekend. I'm going to get back to work, do my thing here. Thank you so much for watching, by the way. I look forward to next week's class. I look forward to next week here in the markets. Enjoy the rest of your day and your long, well, not a long weekend, just a regular weekend there. And if you need anything, you know where to find me. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose JazzWealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.